Welcome to the Debit This, Credit That podcast with Wheeler Accountants located in San Jose, California. In this podcast, we discuss how to solve accounting challenges in both your personal life and your business. We take an energetic, tech-savvy approach to solving accounting challenges that steal your focus and your time. Now, on to the show with your tech-savvy accounting experts, Matt Wheeler and Michael Bryant.
Today's going to be a very interesting podcast because I have the opportunity to really have a chance to learn from Michael about the 7 common peer accounting review deficiencies. Now, there's a lot of stuff going on here, Michael, but I want you to break down the reason, the onus, the motivation for you to come up with this 7 list. So where did these 7 common peer review deficiencies come from?
Yeah, absolutely, Matt. Over the last 5 years, I've been performing peer reviews at other CPA firms, and I've kind of come together with a list of the common deficiencies that I've noted at my peer review clients, and I thought it'd be really helpful to share with my current clients and prospective clients and the CPA industry as a whole.
Fantastic. So let's dive right in, man. So the first one is lack of partner involvement. Explain.
Yeah, so one thing that I have noticed in the peer reviews that I've performed is that there isn't a documented partner involvement. So partners want to make sure that they're attending the planning meetings, that they're signing off on those documents, that they're documented that they've been at the planning meeting. Also documenting their timely review, so making sure that planning is signed off during planning, that field work is signed off around the field work time, and that everything is signed off before the reports are actually issued.
Fantastic. So number 2 is inadequate risk assessment. What are you looking for there?
So this, unfortunately, I see a lot at the firms that are performing audits, is just not a full understanding of how to document the risk assessment. For example, I've been out at clients where they've assessed the control risk at less than high. Unfortunately, you cannot assess control risk at less than high unless you've done sufficient testing of those controls. I've also noticed where the inherent risk is documented at less than high without any reason for that. Now, that is up to auditors' judgment to be able to say what the inherent risk is. And certainly we can say that it is less than high, but we just need to make sure that we're documenting why it is. Also, the audit programs a lot of times are not customized for the specific client, and so just making sure that the audit programs are taken and customized directly to the client that you're working on. Our practice aids tend to give us a whole lot of broad steps that don't really address what the risks are at our specific clients. And then just making sure that you have a team meeting to discuss and assess that risk.
When it comes to management of the documents that you need, what have you seen is one of the biggest management aspects of the documents?
I've really noticed that there isn't a lot of documentation around the communication with management and those charged with governance. Now, we do have a requirement. There are required items that need to be disclosed, and our practice guides are very good at giving us those templates. But just making sure that you're really showing your client the value of the audit, also ensuring that those required communications are addressed. And then also documenting any material weaknesses that are noted, any significant deficiencies, or other deficiencies that are noted. And it's very important that those are spelled out and that they're actually called, if you've deemed a material weakness, that needs to be communicated. then it does specifically need to say material weakness. If you've deemed it as a significant deficiency, then it does need to say significant deficiency. We can't, unfortunately, get creative with the wording around those. So making sure that we're very specific in our wording there. Other deficiencies can be communicated with management through a management letter or just verbally, but just making sure that we do have those documented material weaknesses and significant deficiencies. And then make sure that you use the practice aid to ensure that no communications are missing. Because a lot of times I'll go through and look at those required communications, and in our peer review checklist, they're required, and there's a lot of specific items that you want to make sure that you're getting in there.
Well, let's continue with documentation. And so we're on number 4. The first one was lack of partner involvement. The second one was inadequate risk assessment. The third was no documented communications with management. And this next one is documentation gaps. Now, this could be a really big deal, couldn't it?
Oh, absolutely. So specifically, I recently went out to a CPA firm, and they had performed an audit. And they had said that they had gone out for an inventory observation. Unfortunately, in their audit documentation, that inventory observation was not documented. And we could have a discussion about it, but since it wasn't documented in the work papers, then it's like it hasn't done. So just making sure that when you are performing a specific test in your audit, that you are documenting those. You want to make sure that your peer reviewer can reach the same conclusions based on the documentation.
What is sampling, and what sort of issues have you had in the last 5 years of going out to different accounting firms and doing these sorts of peer accounting reviews? Have you seen with sampling?
What we've noticed with sampling is that the auditor is really using more of an arbitrary sampling methodology. So not really documenting the reasons behind the sample size. Are they doing 10? Are they doing 25? Are they doing 40? Or they're doing 60? And then also looking at whether you're doing an attribute type sampling or a monetary sampling. And so when you're doing sampling, you need to be documenting the reasons why you're doing your sample size. The AICPA has a really great guide on audit sampling, and that can be found at aicpa.org. And then just search audit sampling guide. But the main thing is that you want to make sure that you've documented your sampling and the reasons why. So typically, if you expect not to have any findings, then in a large sample size, 40 is probably a sufficient sampling size. Mm-hmm. But however, if you are expecting maybe 1 or 2 variations, then you're probably going to have to do 60. And so just making sure that your sample size is appropriate for the test that you're doing.
Okay. Wow. When it comes to monitoring, what have you seen when you reviewed the overall monitoring aspect of it?
I see that a lot of firms forget about their monitoring. So as part of our requirements for quality control, we need to monitor the work that we're performing every single year. And so a lot of the firms, they will either do the monitoring and forget to actually do the documentation of the monitoring, or we see where they haven't done the monitoring at all. So monitoring, you would select some engagements that would be reviewed after the report has been issued. And so typically this is done on an annual basis. And then just making sure that you're documenting what findings there are and address those findings. And then also make sure to share them with your staff. A lot of times I'll see where the partners have done some monitoring, and then I go and talk to the staff, and the staff are like, oh, I didn't know that there was any issues. And of course, then those issues are repeated the next year.
Sure. All right. Talk to me about quality control.
So the quality control document is really where we start with peer review. So We will go to an audit firm and review their quality control document. And so you want to make sure that that document matches your policies and procedures. We have a lot of great practice aids out there, but again, they're can be very voluminous and they may not specifically match your policies and procedures. And when we go out for peer review, we're testing against that quality control document. Remember that it just needs to contain the minimum standards. You can always go above and beyond. For instance, I had a CPA firm that said that they did staff reviews after every 30-hour engagement. So then I had to go through and review each one of those, and they unfortunately did not have staff reviews for every engagement over 30 hours. So what I recommended to them on a go-forward basis is that they say that they have a written annual review. And if they want to do some over 30-hour engagement, they can certainly do that. But their minimum standard would be that on an annual basis, they have a written staff review.
Michael, if they don't do this, so if they don't follow these or fix or come prepared, for lack of a better description, with these common peer accounting review deficiencies, how much longer can your job take as the reviewer, or can you even do your job?
So it definitely takes more time when there are noted deficiencies. So with each one of these, they will start out as a matter for further consideration. And then we need to look at if that matter is just going to be a finding for further consideration, or is that going to have to be reported in your peer review report as a deficiency or possibly a significant deficiency? And if it's a significant deficiency, then it would be a failed peer review report.
Ouch.
So that's why it's really, really important to address these things before having a peer review.
So not only is this going to help you as the reviewer, but honestly, these 7 things to me, Michael, seem to be very important things for the firms to just make sure that they're documenting things appropriately and they're really following the steps. Am I right there?
Absolutely. So again, this would be something that at any point you can look at your system of quality control and look to make sure that these deficiencies aren't at your firm, so then you can ensure of getting a pass peer review report.
Wonderful. So if our listeners want to get a hold of you, what's the best way for them to get a hold of you?
Best way to get a hold of me is either email michael@wheelercpa.com or phone number is 408-252-1800 extension 235.
Fantastic. And we'll make sure we have all of that stuff in the show notes for our listeners. So Michael, thank you very much for your time today.
Oh, thanks for having me, Matt.
And this has been Matt Halloran and Michael Bryant, the audit partner for Wheeler Accounting. And I hope you enjoyed the 7 common peer accounting review deficiencies, and we'll see you on the other side of the mic.